The number one reason people purchase insurance is because of fires and because of the risk of fires. And of course, the risk of fire is going to determine how much you're going to pay for your insurance. Many Californians who live right up against the foothills, right up against canyons and areas which may provide during the summer months in California fertile ground for wildfires, find themselves paying a lot more money for fire insurance, or they can't get fire insurance through typical insurance companies. Instead, they have to go to the California Fair Plan, which is not a state agency. People actually believe the Fair Plan's a state agency, but it's not. It's a conglomeration required by statute of all insurance companies that sell fire insurance in California have to pay a percentage equal to its percentage of market share. So a company like State Farm certainly pays a lot more than small companies that might have less than 1% of the marketplace. Fire insurance is the most typical type of insurance loss that people suffer in their homes, and there's all kinds of loss that can occur. Of course, the kitchen fire or the electrical fire where your house burns down or is damaged because of a neighbor's fire, that's probably the most typical. But during the summer months in California, it's not unusual for homes to be burned in wildfires that take out entire neighborhoods. And policyholders or consumers need to make sure they have enough insurance. One of the biggest mistakes that we see with policyholders is that they go out and they buy an insurance policy, and 20 years later they have the same policy with the same limit. One of the mistakes people make in California and around the country is not having enough homeowners insurance for their home if they have to replace it. And oftentimes people buy an insurance policy 20 years ago and they've never increased the amount, even though the cost of construction has steadily risen over the last couple of decades. What we typically see are, particularly with older homeowners who have been in their home for a very long time, is they don't have a good idea or understanding of how much it costs to rebuild that home. So what can a policyholder do? Well, the first thing they can do is ask their broker. Ask their broker to make a determination whether or not they have enough insurance to build their home back exactly the way it is today. Another thing that homeowners can do is contact contractors. Find out how much per square foot it would cost to rebuild their home exactly as is. And then go to the tax roll and determine how many square feet you have and multiply it by that number. Also buy extended replacement cost coverage, because that can cover you in case you don't have enough insurance to completely rebuild your home. It's the policyholder's obligation. It's usually not the insurance company's obligation to make sure that you have enough insurance. And as you continue to increase the amount of insurance on your policy, the added insurance is usually not the most expensive insurance. It's the first layer of insurance that's the most expensive when it comes to your premiums. So people need to do themselves a favor and protect themselves and make sure that they absolutely have enough insurance to rebuild their homes.